Hey guys, let's do a quick market recap here. First, we've got our stock screener open here. I used this to find breakout stocks, and I knew something was up today when we opened this, and volume on all of these guys in the pre-market was extremely low. This looks like volumes, picked up throughout the day, but honestly, this is nothing for what it was this morning. We were seeing stuff that was, these guys up here, the big ones though, like 300,000. At that point, I knew something was up with the market today. First, let's go over to the VIX front month versus back month. You can see here that we achieved the 1.3 ratio here up on the 11th of December. So giving us that hard sell signal. As soon as we rejected there, coming down, that was time to sell. And funnily enough, when we go to 11th of December, that's the market peak that day. Strange how that works. So look, guys, we had a buy signal here. It's followed through up into the sell signal. Your prior sell signal obviously would be based on the VIX and telling you to get the hell out of this thing, front month versus back. So that's what you should have done. Now we're obviously in a downtrend here. Post-market, it's up a tiny little bit because of Micron Technology earnings here. So on a 1 minute chart, they've released the earnings, obviously, better than expected. Kind of looks like a speed bump on the way down to me. So that's what that is. With the QQQ, we're obviously also in a downtrend. We also had that buy signal 25th of November. Again, the VIX would have told you to get out on the 11th, and then we had that sell signal the next day. Again, funny how that works. The VIX always knows what's happening, and again, the next day. When we look at the weekly chart on the QQQ, we had this big, that's a strong sell signal, the big red diamond. So over here, this is a sell signal, but it's not a strong. The bigger the diamond, it's a strong sell signal. So that was basically just after that peak. Market peak was there, obviously closed down that day. And then the next one. And then that's triggered off the down sell, triggered a downtrend change for the weekly. And then we're rolling over. And then we go and have a look at the SOX, so the semiconductor index. You really want to be tracking this one for what's happening out there in the market, because this guy controls the market. So obviously we had the pullback, and then we've had the re-entry, and then a peak, and then we've had that sell-off, and where we've gone into a downtrend change again. And we're still probably heading lower. And again, when we go over to the weekly, we had the big strong sell signal. When they are on a weekly, those sell signals from the indicators that we use, it counts for double, right? Because it's it's not a daily sell signal, it's a weekly sell signal. Then we obviously had the downtrend change, and now we're still rolling over. It's almost like this is a double top retest if you have a look here between those two. So now over to the VIX itself, we've had 3 daily closures now above the 5 and 10 day moving average. Technically 2 in a row is a sell signal, but third has just confirmed it. So the VIX is likely to go higher here. You can see the MACD is starting to cross up. It looks like volatility is set to increase. When we have a look at panic selling, anytime we get above this yellow line and we get to above a 3, we get this offshoots. This is the S&P in the middle here on a 30-minute chart. We get so oversold that we, go up the next day. So every single time, it's only a short bounce, right? But every single time we rally because we've oversold. So even here, if we zoom in on this guy, we've bounced, it's gone up and bounced. Today, that hasn't happened. We haven't had enough panic selling yet to get a bounce. We're not going to bounce here. I wish we would. We're not going to. It's not telling us that we're going to bounce. Only when we get above that level of 3, we then get so oversold that we get a bounce the next day. So essentially, this is telling us it's a good time to buy when we get above 3, because the chances are we're going to bounce the next day. That actually happened, yesterday, Tuesday, when we're looking at the Qs, and we had 1 hour buy signals. So we had this 1 hour buy signal here, which obviously validated up to here. You know, that was good. We actually traded this, made decent profit on that. The 2 hour confirmed as well. You know, incredible. The 3 hour confirmed, and the 4 hour also confirmed. It was a bullish setup. Let's go and have a look at gold. Gold's just hanging out here. It needs to obviously break above and then confirm. Let's just see what happens with that one there. It is looking bullish. We've also seen it moving with the market. When the market goes down, it's pulling gold down as well. Advanced market structure. This one's really, really good. And if you guys join up on the Discord, you can get a link to this chart and have a look. But basically, we've got some divergences here. So up top, this is market bellwether indicator, which is an advanced, highly advanced market structure, I should say. So down the bottom is the SPX, and up the top is the bellwether. And then these MACD and buy and sell signals are related to the bellwether. So here, before the tariff crash, we had this big divergence when the market was still making higher highs. And then again, we're getting the same thing now where the market is making these higher highs and the advanced market structure is saying this is no good. And then when we go and have a look, obviously, at the buy signal that we had here, you know, if you had it entered here for the S&P, this would have obviously paid off up until, you know, you passed and you got this sell signal here saying to get out. So good information to have for when is it safe to get in and play and when is it not. Another market structure I like to look at here, these are all your big guys combined. So Google, Amazon, Apple, Meta, Microsoft, Nvidia, Tesla, Avgo, TSM, and Palantir. Again, giving you market structure information about, you know, what the hell's happening. Again, we got that buy signal 24th of November. When we switch back over to the SPY, you know, you could have got in the day earlier on this one here based on that market structure signal. And then when was the exit? We had the exit signal on Friday the 12th. And hey, that's just after the VIX. Interesting. So always good to have yourself armed with more information about the underlying mechanics of what's happening in the market. And just wanted to show you guys here one more thing before we wrap this up. An indicator I'm working on at the moment for getting market bottom signals. So there's specific things that happen at a market bottom. And you can see here we've had 3 market bottom signals there in a row on the tariff crash. It doesn't get all of them because there's not always strong enough signals, but we do get for most of the market bottoms the strong signals. I'm still working on this one, still needs a bit more work, still needs a bit more refining, but you can see there, look, it picked the bottom perfectly. Here it's picked the bottom perfectly. And there are some a number of actual things that happen at a bottom which can really determine if it is the bottom. And very cool. I'm still working on it, but it'll be ready soon. And very cool for those who are subscribed to getting the indicators that I use. And this will obviously really, really come in handy, even if it's just for confirmation purposes when the next market bottom happens. Now over to bonds. This really needs to be kept an eye on. If you're part of the Discord, you're going to get more update information on bonds because they are so friggin' important. They're way bigger than the stock market. You need to understand what's happening with bonds. You really, really, really need to understand what's happening with bonds. I'm not going to say too much more on YouTube because it really shouldn't be said too much, but basically our 30 is here, the 10 is in the middle, the 2 is on the right here. The 30 and the 10 are breaking out, the 2 is going down. Big money is moving into bonds because it's safer, it's a guaranteed return, and at the same time, the Fed is buying the 2-year, which is driving the price down. There's panic in the market is the short version, and money would be safer in bonds because it's a guaranteed return. So do you want to invest in an overpriced market or do you want to get a guaranteed return? Obviously, you know, big money is going to choose the guaranteed return. But this is really critical to know about this and what it is doing so that you can better understand how the stock market works because the bond market is way bigger than the US stock market. Anyway, thanks guys. Hope you have a great night. Bye.